If you ever felt overwhelmed when it comes to understanding order flow with all these indicators, volume profile, and complex strategies, well, this video is about to change everything, because I'm going to show you guys how you can master trading order flow just by understanding basic market structure and price action. There's no fluff, no indicators, no nothing. Just clean charts and setups that work on a consistent day-by-day basis. Throughout this video, I'm not only going to show you how to read and trade order flow, but I'm also going to break down this exact trade that I took this morning, which you can see the executions right here, where I took the first entry, I scaled in, and then I scaled in for a second time right there, and I ended up buying that position back right here for a take profit, making me a little over $8,000 on the day, trading live with my team every single morning. So if you want to become a much better trader, I urge you guys to grab your notebooks, take notes throughout this entire video, and stay to the end, because there's going to be a lot of value that you're not going to learn anywhere else but this channel. Two things that I look for on a consistent day-by-day basis when it comes to understanding where I am within the order flow and essentially predicting the markets of where it's going to go next is by paying attention to both market maker models and creating my underlying confluences. And I'm going to break that down here very simple. Market maker models is the underlying market structure of where we currently are at within the range. And it's built upon two things, a buy side of the curve and then obviously a sell side of a curve. Then a market maker model, it always starts off like this. We have an original accumulation, right? This is where price builds liquidity within a specific range, right? Usually the building of liquidity is during the Asia session or when the market opens up. That's when there's the least volume. So this is our original consolidation. Then we get into more so the buy side of the curve when it comes to the market structure, right? This is where price leaves that specific range, and then we start seeing higher prices. Once price initially leaves that range, it'll come back lower and retests it right there, continuing higher. Right here would be our first pullback within a buy model. So we had that consolidation right there. Price broke above that consolidation. Now we're in a buy model, right? And obviously this right here would be the first pullback. After price makes an effort to push higher, we get another pullback, right? This would be our reaccumulation number 2. So price creates another pullback right there before we see one more push higher. After this point right here, this is where we get into our smart money reversal. This is where price reaches a level to where it can no longer continue going higher, and obviously it starts to go lower. Usually it's identified by these two things. It's when price comes higher to take out this original high as a liquidity sweep. A lot of people who maybe went short here during that retracement, they put their stop losses back with this high. So obviously price will come back higher to take those traders out. After this liquidity sweep right there, we reach the level to where the market can no longer continue going higher. And then obviously we see this drop to the downside right there as a market structure shift. So this is where market structure was bullish. It reached a level to where it can no longer continue going higher, and now it's going back lower. See, this was the buy side of the curve right there when price was going higher, and now we're in the sell side of the curve. We can see here price creates a pullback right there. That would be our first stage sell. Identify this in red here. First retracement right there. See, the next retracement would be something like this. Market structure was once bullish, now it's going down bearish. When the market is in this sell model, or basically given this reversal, price is going to come back where? Into that original consolidation. So we can see here price creates another pullback right there for coming back lower. I'm able to predict where the marketplace is going to go during the day is simply by identifying where am I at in the current range of the market maker model. So if I'm trading during a day like this, right, I would see that I'm currently in a market maker buy model, right? We had this original accumulation right there, then we've seen a break away from it. So obviously once we had this accumulation and then we broke away from it, I know that price is not going to come back down here. So when price gives a pullback right here, I'm able to frame along to reach back above this high. Same thing right here. When I see price create a pullback right here and find support to push higher, then obviously on this next day, if I can see that we're in a current buy model, on this pullback, I can buy right here and sell back at these highs, the buy model. And understand that we're in a current reversal, right, where we can see a liquidity sweep and a market structure shift. Know that price is not gonna come back up here. If I'm trading the day right here, looking at the underlying market structure, I know that we had a liquidity sweep market structure shift here. then I know that we're in a sell model. So during the day, if I can frame a short here, here, or anywhere within this range, I can then target back below this low or even back below this low right there. As right here, I can frame a short reaching back below this low. I can frame a short right here as well, reaching back below this low and down into that original consolidation. When it comes to understanding order flow, it's trading in alignment from where we are currently at during the market maker phase. If we're currently in a sell model, every single pullback within the markets is simply a retracement to continue going lower. Every single pullback right here is retracement to go lower, and same thing right here is a retracement to go lower. So understanding this basic framework of market maker models is going to help you understand underlying market structure and where you're currently at. And another thing that we can use is confluences. So confluences is pretty simple. It's multiple things stacked on top of each other to give you an idea for whether you should be bullish or bearish on the day. So a common confluence that we can use is an SMT divergence, and let me break it down. So we can take note of this original high here. That price came higher to take out that previous high point before seeing this drop lower. SMT divergence would be if we had a correlated market that didn't take out that high. Let's say this is the S&P 500. Market correlated to the S&P is the NASDAQ, referenced as the NQ. So let's say the S&P 500 took out this high point. But if we look at the NASDAQ had that same high point, but it failed to take out that original high, right? This is what we call a failure swing, where it fails to take out that original high. S&P 500, which is correlated to the NASDAQ, the S&P 500 took out this high, yet the NASDAQ didn't. This gives us underlying confluence that the market is more so leaning bearish, because the fact that the NASDAQ failed to take out this high point gives us the idea that price is weak. It reached a level to where it can no longer continue going higher, so the only place that the marketplace can go is lower. Understand that the market can only go higher or lower throughout the day, and your job as a trader is to create as many confluences as possible to give you an idea for why it should go higher and why it should go lower. That's high probability. If I'm trading on this day, it becomes very easy because we have many confluences. We had this liquidity sweep, then we had this market structure shift. That's a reversal. Then we had this SMT divergence, really good. Not only do we have a reversal signature right here by this liquidity sweep market structure shift, but now we also have an additional confluence like this SMT. Makes it very simple for me to understand that the market is most likely going to continue going lower. This is how I trade on a consistent day-by-day basis, understanding where I'm at within the range and creating these confluences to give me a high probability scenario for whether I should be bullish or bearish on the day. I'm gonna take you guys short charts and show you guys the exact trade that I took this morning that made me a little over $8,000 with my students. I'm gonna break it down simple, easy, so you guys can follow along. You guys learn a lot from it, so you guys can implement it into your own charts and start making profits now. Starting off here, we're looking at the 1 hour time frame. This is the time frame that I use to look at the markets, mark out my market structure, and understanding where I'm at within the range. It's not too low of a time frame to where you'll get faked out, but it's also not too high of a time frame to where setups and market structure will take hours or days to pan out. It's right there in the middle. Whenever you're framing your market structure coming to a day or identifying your order flow, I like to use the 1 hour time frame. First thing I want to take note of is obviously down here as our original consolidation. Here that this was the level to where price consolidated before we saw this push to the upside. You can see here this breaker structure higher right there. Great displacement within the markets. We can take note of this bullish fair value gap right here. It's pretty simple. It's a separation between this first candle's high and this third candle's low. So this gap separation creates an inefficiency. Price comes down into that fair value gap right there, finds a level of support, and it pushes back higher. Is our first stage accumulation. Coming up here, we have our second stage accumulation by this last down close candle right there. It was the last down close candle right here where price opened up, following this massive gap to the upside. You can see price creates this strong body close right there. Down into that last down close candle, and it was not willing to break through. Instead, it came down into that level, found support to push higher. Found support to push higher to go where? Back above this original high point right here. We're coming back into that high point. That is our liquidity sweep. That liquidity sweep, we can identify this market structure shift from the prior day. Here, this is our first stage accumulation right there inside of that bearish fair value gap. Back into that bearish fair value gap yesterday, found resistance to go lower. Then right here, this is kind of like our second stage right there. This was the last up close candle that tapped into that fair value gap before seeing this strong drop to the downside. See, when price creates a resistance level, taps into it and then leaves it, should not come back into that same high. Price find resistance here to go lower. Now up close candle right here, that becomes a bearish order block. Bearish order block, that's our reaccumulation. Number 2, found resistance here, resistance there, eventually came all the way back down here. Into our markets today, pretty simple to understand. Price is currently in a reversal. We had this liquidity sweep at these highs, we had a market structure shift of these lows. Price is simply just coming back up here to create a retracement. Go where? We have a couple areas. We have this low right here. This is that Asia session low. So the Asia session is between 8 p.m. to 12 a.m. EST. So that's the Asia session low. That's a first level it can come down into. The level it can come down into is the previous day low. This is the low from the previous day. And obviously down here, which is the original consolidation. This is where price consolidated within this specific level for a pretty long time, or finally breaking out from it. Break a structure right here before retesting it to go higher. That we know we're in a reversal into the day here, it makes it very easy to understand where price is going to go next. Right? It's not going to go higher all the way back up here. Price created this liquidity sweep and market structure shift. This is a strong high point. It should not revisit to. Obviously, when price is coming back up here, it's coming back into inefficiencies, which we can take note of this fair value gap right here. Since that fair value gap dinked it perfectly, forcing this drop lower. I did here this morning is I took note of this last down closed candle. This is supposed to be a bullish order block. This is the last down closed candle right here before this strong push to the upside. I already have a great idea for bearish market structure is in a reversal to go lower, right? We have this low right here, this low right here as targeting. Another way that you can improve when it comes to identifying order flow is by paying attention to support and resistance levels and how price reacts within them. If price were to break through this bullish order block, would give you a confirmation that order flow is bearish, because this is supposed to be a bullish level. The fact that price was not willing to find support within that bullish level gives you the overall gist or the overall idea that price is bearish. I don't need, indicators or anything like that to tell me that price is bearish. I'm simply just paying attention to my specific levels. This is supposed to be a support level. Price cannot hold within this support level. You're gonna find resistance to go lower. When it comes to creating a day bias, it was very simple. Understand that we're in a current reversal. The liquidity sweep, market structure shift, currently in this pullback here, back within that bearish gap. You can see price break through this level, obviously retest it, find a level of resistance to now target back below this low, and come all the way back down here. To keep it pretty simple. Right, we're basically understanding where we are at within market structure, and we're creating contexts for what has happened before, where we're currently at, and where do we anticipate price to go next. We can also take note of a correlated market and look at the Nasdaq. Here we can see we have a S&P divergence. You can see here that the previous day high is right there on the Nasdaq. Nasdaq took out that previous day high. If we look at a market like the S&P 500, didn't take out that same high point. This gives you the overall idea. We have a S&P at these high points. Most likely we are bearish. These are all the overall confluences. We understand that we're in a sell model. The overall confluences and everything that we look for is leaning towards lower prices. Coming into a market, I was looking for more so lower prices. So I'm gonna go down to a 15 minutes time frame here and show you guys the exact trade. Before I show you guys the exact trade, if you guys are getting value from this video, it only takes 1 second to click that like button. As well as if you guys want me to help you personally one-on-one, you guys can click that first in the description and apply for coaching. Inside of the Spark coaching program, we work with students of all backgrounds, right? Whether you're a beginner trader, struggling trader, or break-even trader, our goal is to understand where you are currently at within your trade stage, what are the current goals that you're trying to achieve, and building out a blueprint and system to where we can help you get there. We have things like day live trading. We have weekly calls with all of our students answering questions, as well as you can personally reach out to me whenever, ask for help, as an extensive curriculum teaching you everything about trading when it comes to technical analysis, psychology, risk management, detachment, everything that we think would create a profitable trader. So if you want to apply for coaching and become more consistent within the next 90 days, you guys can click that first link and apply. But if you guys don't want coaching and you guys just want to trade live with me every single morning and catch trades just like these on a consistent day-by-day basis, you guys can click that second link in the description and join the Spark trading team. The 930 is just about to open up here, right? Since this is the S&P 500, 930 is when that influx of volatility kicks in, and it's generally between 930 to 12. So let's see how this plays out. Here 930 opens up, it opens up, creates this initial wick higher, and then we see that drop lower. Right here, around 9:45. Look what happened. It opened up, came lower, took out this original low, broke back below that low right there, which was referenced as our bull short block. The fact that price is breaking back below this support level gives me the general idea that if I had to choose between higher or lower prices, this gives me the general idea that price is not respecting these support levels. Most likely we can go lower. We did have 10 a.m. news, so I waited for that news embargo to come out. Here, 10 a.m. news comes out, nothing too crazy, pretty good. And this is when I framed my sell setup right here. Original stop loss was all the way back up here, about 15 points. And if you guys don't know my risk management structure, it's pretty simple. My first trade is with lower risk, but a bigger stop size just in case. And as price goes into my favor and I get confidence, then I add to that winning position and I maximize my reward while I trail my stop loss. So my first trade right here was something like this with a 15-point stop loss, reaching back below these lows for about 22 points. And within the same candle, I ended up scaling into my trade idea. So when I scaled into my trade idea, adjusted my stop loss from this high, now back up to this high. And the reason why I adjusted it back up into this high only was it because I was managing my risk pretty well. From 15-point stop loss to now only a 10-point stop loss, I had confidence that price was going to find resistance here because this was the high up into that fair value gap, owing this breaker structure to downside. It had this area of resistance, which was that fair value gap, did not break through it. Instead, it's breaking back lower. This gives me the confidence that price is not going to come back up here, so I can be safe putting my stop loss back on this high. I scaled into my position right here and I adjusted my stop loss. Let's say if I was risking 400 bucks on this trade with my stop loss up here, and I scale in and I trail my stop loss, I go from risking 400 bucks now risking 600 bucks, basically risking additional $200. Price hits my take profit. Instead of making anywhere from $800 to $1,200, I now make anywhere from $1,200 to $1,800 on that trade. So I end up risking an additional 200 bucks to make an additional $500 to $600. And this is how I trade on a consistent day-by-day basis, keeping my risk very, very tight, managing risk very well on the downside, but I maximize my reward on the upside. This allows me to have a lower run rate, but make a lot of money consistently, right? You don't need to have an 80-90% win rate as a trader. How I trade and how I teach my students to trade is advice that anybody can use. Not everybody can have a high win rate, but anybody can be successful using this risk management structure, even if you have a lower win rate. The goal isn't to be perfect within your trading, but it's about building that confidence and making you a much better trader. Let this play out here, and this was the exact trade. You can see it just immediately went down there, taking out the whole thing. And you can see right here, original consolidation, price came all the way back down there, pick it out perfectly. Just like I talked about the market maker model, this was that original consolidation, higher, pull back to level could no longer continue going lower, came lower, pull back right here. And this was kind of like the second pullback right there. And then obviously taking out the whole thing. That is the market maker model for the day. This is how I trade on a consistent day-by-day basis. If you guys want to learn exactly how I trade and you guys want coaching from me and my brother Spec Trades, help you become a much more consistent, profitable trader within the next 90 days, you guys can click the first link in the description and apply for coaching. On this call, I get to know who you are, where you're coming from, and what your current goals are. I build you out a plan, a framework of how we can help you achieve those goals. If you guys are interested in that, that's the first link. But if you just want to trade live with me every single morning and catch awesome trades like these every single day, then that's the second link, which you can join the Spark Trading team. If you got value from this video, click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. If you guys want to watch another video going over order blocks and everything that you need to know about order blocks to becoming a much better trader, that's about to pop up on the screen right here. So make sure you guys watch that video next because it's coming up.